75 million compared to the expected draw of 2.785 million. Distillate inventories a draw 4.494 million compared to the expected draw of 2.15 million. Crude cushing inventories a draw of 0.796 million. So raw bigger than expected draw across the board there.
Hey, hi everyone. Good morning and welcome to our live show. Hope everyone is doing great, guys. Guys, number 0 or 1 in the chat if you can hear me and see my screen. Naveen, thanks for confirming. Guys, a bit sick today. A very bad cold and bad throat. So I'll be doing a little bit less talking today. Cube Gift, Sammy, Dan, Muhammad, Busy. Welcome all. Rob the Scalper, Gwetam. Yeah, markets tech looking good. Sector weakness still there. Healthcare, Dow still looking a bit weak.
We have posted out the weekly inventories report on the feed for you to read through.
Yeah, very strong market as of now. Tech is good. Tech is looking strong. Waiting for pullback to go long.
According to the EIA, US net imports of crude oil fell into negative territory in the latest week, the lowest on record. So heads up, Bank of Canada's Macklem governor speaking now. The Nasdaq 100 extending gain to 0.5%. The US withdrew a withdrawal of crude oil from the SPR rose in the latest week to the biggest since October 2022, according to the EIA. Bank of Canada's Malcolm says if energy prices stay high for longer, there could well be a need to raise the policy rate.
Stub filled.
Sorry guys, cannot do much talking today. I'm sick and I have a bad throat. If I talk, it's I may have to shorten my day if I talk too much. And it's a big day today with FOMC earnings. So it was just a scalp short. I'm still looking for a long entry. If we get a pullback, little bit more lower, just above VWAP, not exactly VWAP, I might go for long, or I might have to go long here in the breakout with a smaller size.
Malcolm says AI is not having a big effect on our policy decisions right now. According to Hearst, the US has spent $25 billion on the Iran war so far. Says Pentagon Comp controller Jules Hurst testifying in the Iran war. Again, they say that the US has spent $25 billion on the Iran war so far.
So Dow is still weak. Dow still continuing to look for new lows. Dow is trying to tell us something since yesterday. If you are with me on Friday late afternoon, I told you, right? The only pace or any bearishness in this market is coming from Dow. It is the product which is not making an all-time high. It is the product which is giving an impression of making a lower high that I conveyed to you last Friday itself. So this week you can see that previous all-time high still in the process of making a lower high. It is, I don't know, just to be aware, after the FOMC, after the earnings may play out the big downside. It will not be a complete sell-off, but at least a decent 2-3% down. But yeah, don't assume, let the FOMC come, let the earnings come, and then make a call.
Macklin says there is no timeline set for possible raising rates. Again, Macklin says there's no set timeline for possibly raising rates. Bank of Canada's Rogers says over longer term, trade tensions are a bigger threat to the economy than higher oil prices. Michael says there is no risk-free path for policy interest rate. Michael says if we raise the rate now and oil prices had then gone down, by the time the rate was impacting the economy, we'd wish we hadn't raised the rate. Malcolm says we have some slack in the economy, so we don't think higher energy prices will rapidly be passed through to goods and services. Fitch Ratings says recent dollar strength could unwind if oil prices fall back. Macklem says that we wouldn't characterize today's comments as forward guidance. Macklem says it is useful to convey how we would handle various potential outcomes.
Keeping the stop loss closer as it is top of the hour. We could rotate down also, so keep it tight.
Stop filled.
Just let's wait for the stop of the hour because we could rotate all the way down into view up. Satish, good job. Thank you so much. You saved me on that breakout.
Candace Rogers says there's no single inflation number where we would completely change our view.
Yeah, that is the problem, Jimmy. Yesterday also in the afternoon, I lost one trade, but I didn't regret shorting that market because as you see now, there's a lot of sector weakness. Dow, Russell, they are all making new session lows. So Nasdaq, it's just squeezing. There are shorts, and it has been squeezing those shorts. But there are shorts because we recently had a down movement, and the market is coming down after 3 or 4 weeks, right? So there's a lot of excitement to short this market. It was working well until late afternoon, 1 p.m. These are more of a squeeze. I think for the FOMC we might even come down again. So be careful, guys, going long. There are some cracks in this market, as I showed you, right? Dow chart not looking great. This doesn't give me warm and fuzzy feeling. This is definitely a lower high in making. Generally, the smaller index, they try to indicate what is coming ahead for the larger index. Yeah, the top of the hour thing saved us on that long. We had a momentum. That momentum is gone now. For top of the hour, it is again backing up. It's still not bearish. We can still buy this dip, but at least we saved ourselves this much of pain, right? This much amount of pain. So yeah, we'll see. Small long should be fine here.
That concludes conference from Bank of Canada's Macklin. So to summarize, nothing of significant importance from Macklin.
Yes, masters, check your chart on ES. So just looking for a scalp here, not looking for a big winner or something. Small scalp. Yes. Okay, they sold off all the way into the VWAP.
Traders boost Bank of England bets, price 3 quarter point hikes in 2026.
Yeah, I ended up holding all the way till VWAP. This is last line in the sand. I mean 220 maximum. So Dow printed a new low, Russell printed a new low. So we should be able to catch a bid here now and not break the market structure. Last previous rally was over here. As long as we don't lose this low, this is still capable of going back up, top end of the range. Get my 2 contracts in. I don't plan to go beyond 2 E-minis on this trade. We should be able to bounce. Short should cover now.
According to Interfax, open fire at Russia's Twaps oil refinery extinguished.
Will this make a new session high? I don't think so. We might struggle here heavily in this zone. So try to, I don't know, take some profit. Someone is looking to short, someone is looking to cover. This is the area it may try to get to first. Bare minimum scenario.
UK 2-year gilt yield rises to highest since March 27th at 4.58% at 13 basis points on the day.
2022 OIS curve, investors priced 73 base points of Bank of England rate hikes in 2026 compared to just 63 base points.
I don't think so. Not before FOMC. After FOMC, anything can happen. I think we are going higher. That's why I'm long, guys. Most of the time, my position tells what I think of the market. I always have a trade on. Because if I have an opinion, I make sure I have a trade on. I don't like talking without skin in the game. Have something on the table, something on the risk, and then talk. I clearly told you, right? Shorts must cover here. It is headed back higher. So I'm not sure yet whether we'll make a new high, but you can see that there are some still more planned exit contracts. At least until then, I think this may turn in. We'll see, guys. How the Dow Jones, ES, and Russell responds. They are weak right now. They have sector weakness. But if they start getting stronger, then this can still fly into a new high. It has potential. It has potential of going much higher. Nasdaq tech is strong today in terms of their price action. You might still see that Nvidia is in red 1%, Microsoft down 1.1%, but the price action is strong right now. They have earnings, obviously. No one wants to stay short into the earnings. After the earnings, yeah, it can dip. Market can sell off. After FOMC, after Microsoft, Meta, Amazon, Google earnings tonight. Get access to our levels, guys. Both the short as well as long, they were confirmed by our levels. I know my entry was not good, but I do that. I get sometimes overconfident on my trade. But I ask members, are you happy with the levels today? Masters especially, can you drop something in the chat? Are your tops, pullbacks, rejections, entries all confirmed by our levels today? Whether it is Nasdaq, whether it is ES. So ES rejection, guys. Check your ES charts. Nasdaq, I'm not worried. Crazy drop from ES Masters, right? And the bounce in the morning from Nasdaq Masters, and this rejection and this bounce, everything
UK
confirmed.
10-year gilt yield on track for the highest close since July of 2008. 20 and 30 year yields on track for the highest close since 1998.
There you go, guys. Hear it from our members in the chat. Every single trade every single bounce, every single rejection came from our levels. Here's the link, guys, in case someone wants to join our group. Exclamation join in the chat. You'll get the link to become member. I can show it to you, not a problem, but yeah, guys, you got to take some actions. Look at that. Look at that drop. Look at the morning rally. It is our master's level. Look at this rejection from master. Look at this long I took. Yeah, a little bit of drawdown. But look at each of this pop. You want to see the rejection they got in the masters. Look at this big sell-off they got in the masters, right? In ES, right from the masters. So having this knowledge a day in advance, you don't have to come and guess, right, where the market is headed. If the level is holding, it's going to go up. If the level is lost, yeah, short. Follow the market structure. Use the level. Simple. So you have an opportunity. I'm ready to share my knowledge. I'm ready to share my levels. When you click on that join button in the description below, you'll get a pop-up window. On that pop-up window, watch that video. It explains my levels, members, experts, masters. I highly encourage you to become masters because, like I showed you, right? What could you have missed today? The bottom, it was at our master's level. The top, that is also master's. This pullback, the only pullback you could have got long was at master's. Rejection or the only sell-off you got was top of the hour, Satish identified, and then the master's level ES. This fluctuation you got, it's because of the level. So yeah, guys, welcome to join us. When you click on that link, watch that video. That video explains all my levels in detail. Click on respective button to become member. Once you're a member, go to the homepage, watch all the educational videos. All the levels are shared under the post tab every evening. And obviously, if you become new paradigm member, you get to trade 2 hours with me in the market open, pre-market and the market
EU
open.
raise funding target for EU bonds for January to June by 10 billion euros.
Where everything, all the trading plans, what I'm going to do with my levels today, I share one more time. Honestly, even if you don't follow his strategy, the levels can be added to another strategies for added confluence. That's how I have been looking at it. Yeah, I mean, I do some mistakes in spite of good levels, but it's okay, guys. I sometimes, like as I said, right, yesterday I was looking too much into the sectors. So I thought like Nasdaq could fall back into the range, and Nasdaq did come down this morning. We were down, remember? Nasdaq did go down initially in the morning, and now no more lows in the Nasdaq. It is strong. So in that new paradigm group, so there's some news again. So ES is struggling. ES definitely struggling.
So the EU raises January to June EU bonds funding target to 100 billion euros from 90 billion euros.
Selling off, guys. Dow Jones selling off. ES selling off. I don't know why.
Stock filled.
Nasdaq is crazy, guys. Squeezing shorts. Those other products are selling off. Russell, Dow just printed new session lows. So a lot of divergence in this market. Difficult to trade if you are moving your head around. It's very difficult to trade. If you don't move your head around and keep your eyes on only one chart, then it could be easy. I have that habit of moving my head around a lot.
According to Israel's Channel 12 News, Trump speaking to them saying, I will not lift the naval blockade without a deal that includes a nuclear program. So they're citing Axios reporter Ravid. Skinner said Israel Channel 12 News on their X, just adding Ravid. Again, Trump turned 12 News, I will not lift the naval blockade without a deal that includes nuclear program. Again, just to correct that is an article from Ravid. This is N12 News citing an interview with them today that he intends to leave the naval blockade on Iran in place until the regime agrees to a deal that will address US concerns about its nuclear program. We have put out that article on the feed for you to read through.
Stub filled.
Celebramos por aquellos que no están, esos que hablaron y dejaron de mirar. Como por fin enemigos ya no hay. No es porque quieres, porque yo merezco paz. Celebramos por aquellos que no están, esos que hablaron y dejaron de mirar. Como por fin enemigos ya no hay. No es porque quieres, porque yo merezco paz. Desaparezco todo lo que está delante de mí. El pozo raro me da miedo caer y no morir. El paso malo caminé sin vista y sin sentir. No hice caso aunque advertencias tenía como mil. está en primera plana. Que no me busquen ni me tiren el WhatsApp de pana. Prometen cambios que solo duran una mañana, porque su vicio les despierta la actitud insana. Pero no pasa nada, ni tampoco soy quien para criticar, porque dejaron de pensar a la mitad. Pero no hay cosa que no se pueda arreglar, y no hay pista que no pueda reventar. Sigo poniendo a la gente en su pedestal, y si los bajo creo que medimos igual. Ellos son malos, no lo paran de contar.
Hit that like button, guys. I'm sick. I'm still trading. Still entertaining you. And still good trading.
Como sumo, si no lo escuchas te dibuja y te hace un arte mudo. Si yo siento tu rapeo me da un estornudo. Celebramos por aquellos que no están, esos que hablaron y dejaron de mirar. Como fin enemigos ya no hay. No es porque quieras, porque yo merezco paz. Celebramos por aquellos que no están, esos que hablaron y dejaron de mirar. Como fin enemigos ya no hay. No es porque quieres, porque yo merezco paz. H-A-X-Y en la casa, como siempre. El de siempre y para siempre.
Okay. Smash this.
Target filled.
Okay. Push the tempo. Okay. Smash the speakers. Okay. Push the tempo. Now let me see you go. Go off like a bomb. Now let me see you go. Go off like a bomb. Okay. Smash the speakers. Okay. Push the tempo. Okay. Smash the speakers. Okay. Push the tempo. Now let me see you go. Go off like a bomb. Now let me see you go. Go off like a bomb. Okay. Smash the speakers. Okay. Push the tempo. Okay. Smash the speakers. Okay. Push the tempo. Now let me see you go. Go off like a bomb. Now let me see you go. Go off like a bomb. Okay. Smash the speakers. Okay. Push the tempo. Okay. Smash the speakers. Okay. Push the tempo.
So looks like there is some news. We don't know what is the news. There's some news. The news service is on. There was something, I don't know, not normal, that drop.
Hegseth says Pentagon will form a command for drone warfare. Got Axios, so reported by N12 News earlier, by the way, that Trump rejects Iran's offer, says blockade stay. So again, just as I said, we have the N12 News from the same reporter from Ravid, now just being put out by Axios. So it's the same story just coming out. But just as a fair warning, you did see a little bit of downside movement, very tiny, on the S&P 500. Again, very small. Same thing just coming through. And Axios just adding further detail that CENTCOM has prepared for a short wave of strikes on Iran.
There are a lot of news coming out.
So the only new bit from Axios, from the N12 News report, is that CENTCOM has prepared for a short wave of strikes on Iran. And seeing a tiny bit of movement towards the upside on the Dixie, very small. A little bit of further downside movement on the S&P 500. WTI seeing a little bit of further movement towards the upside. Again, quite small at the moment. But as said, reported by N12 News earlier on, added part that CENTCOM has prepared shortwave strikes on Iran.
New lows getting printed in the Nasdaq, in the Russell Dow Jones. Yes, so let's take a stop here.
And also from Axios, that Trump would consider military action if Iran won't act.
At least the rejection came from our masters.
We have posted out the article in the feed for you to read through. Again, from Axios, adding detail from the N12 News article that Trump would consider military action if Iran does not act. And as I said, did see some downside movement on the S&P 500, a little bit more now. Did see a little bit of movement towards the upside, and WTI continue to rise here, again off the back of those, the Axios piece. US Treasury slides, 2 yields rising 7 basis points for the day to about 3.9%. Emerging markets FX index hits low for the day and report that Trump rejects Iran's offer and would consider military action if Iran won't act. Oil prices extend gains. Brent crude prices rise now above $119 a barrel.
Excuse me.
It's also keeping an eye on WDI up around about 7.5% now.
Stub filled.
So, further from the article then from Axios, which is out on the feed for 333, Centcom has said already has prepared a plan for a short Powerful wave of strikes on Iran in hopes of breaking the negotiating table. The warning to Iran and Tehran according to 3 sources with knowledge said. After the strikes, which will likely include infrastructure targets, the US would press the regime to come back to the negotiating table and show more flexibility. And Trump also told Axios that he saw the blockade as somewhat more effective than bombing. And the sources said he had yet to order any kinetic action as of Tuesday night. He did post an AI-generated meme of himself holding a gun with a warning to Iran and tagline, "No more Mr. Nice Guy."
I shared the link in the chat. Vetam, Financial Juice Pro. It's a paid news service.
S&P says that WTI and Brent crude oil price assumptions for 2028 and beyond are unchanged. In our view, both prices will need to rise further or remain elevated for a prolonged period to curtail demand and improve market balances. S&P says even if the Strait of Hormuz fully reopens, oil flows are likely to recover only gradually.
Yeah, I don't plan to add more than 2 contracts. I should be able to get the bid. Okay, so we'll take a stop here. See what they're trying to do. Should not be making a new low. It should be able to catch the bid here. I don't think it will cross this low. I think short must cover. We may not break this low. We may not break this low. Short should cover now.
Apple slated to announce the updates WWDC event in June. Apple plans Siri camera mode and upgraded visual AI in iOS 27. Did see a little bit of movement towards the upside on Apple after the back of the headline.
Baby girl, you never learn. Oh, baby girl.
Make or break time. Turned out not to be a good ad. Broadcom making new session lows. Semiconductor weakness. Yeah, we might be coming down. Broadcom hitting session lows, Nvidia heading towards the weekly midpoint. But there is one retest remains. Yeah, added additional contract here for the retest of this zone before rejecting down. But it is weak. It didn't even go for the full retest of that zone yet. Catch a bid, come on. We'll have to take a stop here. Third contract absolutely puts me in the pressure each time I add third contract.
built it, and then we break it down. Hey, click, run it up.
Stuff filled.
Step it up, step it up,
Okay.
step it up.
Yeah, and Nvidia going for the midpoint, weekly midpoint, I think. And Broadcom going for the weekly low.
We built it, and then we break it down. We built it, and then we break it down.
Step it up, step it up. Step it up, step it up.
We built it, and then we break it down.
Mhm.
We built it, and then we break it down.
Step it up, step it up. Step it up, step it up.
Continues channel 12 says that Netanyahu will speak with Trump by phone in the coming hour.
Let's give it a shot. Still a rejection, not catching a bid, not done making new lows. I think when I was shorting yesterday afternoon, remember, like I told you, right, this is not a proper bottom. I mean, I lost yesterday shorting. We're not happy with that bottom, so this is at a big risk now, especially if we lose this area. We could come down for that lows one more time. I'm just not sure whether they will do it before the FOMC. Yeah, they are good, Brett. That's why people like it. I told you, right? People who become members,
One in control,
they never leave me.
the one that brings the heat, the one with the flow.
So look, ES is coming for the proper low. I told you, right? Yesterday when I was shorting, I told you we are not happy with this low. How can you have a low without our level? Look here. Today we came right back in. So yeah, before like people, I don't know who thought like he was crazy to short. Look here where we are. You cannot make a bottom, guys, without our level. So are we going long? Yeah, I mean we are close. We are close. So how do you like that bottom, guys? And how do you understand my short from yesterday? I told you, right? Yesterday, that was not a good bottom, guys. Yesterday, I was not happy with that. And Nvidia rallied the market away from us. This was not a good bottom. We were going to come back for it. And here we are. Now we have a proper bottom. That guy, are you on tilt? I know I have a lot of knowledge. That is the problem, not a tilt. Knowing too much sometimes could be a problem. You think too much. It's good, guys. Once in a while I will lose, but don't you doubt our strategy. Yeah, we are good. I mean, we could come down with FOMC one more time, but for the FOMC, we are good now. We are good to go into FOMC with that bottom. And Nasdaq did not make a new low, by the way. This is morning low. We did not print a new low. Sizing is my problem, guys. Yesterday also I was trying to be little overconfident. I traded 3 contracts right away at the top. So apart from sizing, I don't think I have made any mistakes in terms of like shorting yesterday or today going long. Nasdaq did not make a new low. The range is crazy. It's a big product now. Nasdaq, it moves big.
Iranian oil minister being cited by Al Arabiya that there are no internal concerns about securing and distributing fuel.
hizzer. You can find me right at home, playing Gran Turismo. If you ask what I do, I'll tell you it's none of your business. And if you got a problem, I will knock you in the fizzer. Now meet me at the club, cause everyone going. Fresh meat at the club, and the drinks they be flowing. Gold chains, the ice be showing. If you ain't got a milli, you best be going. Meet me at the club, everyone going. Meet me at the club, the drinks they be flowing. Meet me at the club, everyone going. If you ain't got a milli, you best be going. Ring me on my phone, but there's nobody hizzer. You can find me right at home, playing Gran Turismo. If you ask what I do, I'll tell you it's none of your business. And if you got a problem, I will knock you in the fizzer. Now meet me at the club, cause everyone going. Fresh meat at the club, and the drinks they be flowing. Gold chains, the ice be showing. If you ain't got a milli, you best be going. Meet me at the club, everyone going. Meet me at the club, the drinks they be flowing. Meet me at the club, everyone going. If you ain't got a milli, you best be going.
Meet me at the club. Meet at our master's club now. Next target. Experts level reached. Nope. Experts rejecting there. One more time. Home. There you go. Meet me at the experts. That's our experts level. There you go. Naveen, are you happy now? No more front running for our level? Excuse me. You like the music? That keeps you awake. Is it a rejection again? No, I think we still got some room on the upside. Keep buying at least until we lose this previous low. Yeah, Microsoft. Apple reached its weekly midpoint. Strong move from Apple. Microsoft can also go back to its midpoint. There is room on the upside. But I think it's Nvidia which is coming right into our weekly midpoint. So it will add that downward pressure. But very close. I want to survive this long. I don't know. Will we take another drawdown? But Nvidia is close, guys. Nvidia is close for its midpoint. I want to survive this pullback. Once. Top of the hour. Could spoil the party. Top of the hour.
So I see Brent crude rising above $119.50 a barrel. That was the first time since June of 2022.
got this club going up. But your body moving to the beat. Club going up, got this club going up. 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 But your body moving to the beat.
So Israel's Channel 12 on Trump says that he asked Israel's PM Netanyahu to operate in Lebanon with greater caution and to avoid demolishing buildings, as that harms Israel's image.
The second part was funny.
So again, it's coming from Israel's Channel 12 being cited by Al Jazeera.
Image issues. Excuse me.
A Kremlin aide, Ushakov, condemned attempts against assassinations on Trump. Putin and Trump discussed Iran, says the Putin-Trump call lasted an hour and a half. Proposed ideas on Iran nuclear program. Putin voiced backing for Trump decision to extend the Iran ceasefire. And in this, Trump believes a deal to settle the Ukraine conflict is close, a Kremlin aide says after his call with Putin.
So let's try to exit this trade as we are approaching FOMC. So if I get a pop, I'll try to exit. 2 p.m. is the FOMC announcement, so I don't want to have a big open position for the FOMC.
Guys know that they fly, know that they ride or die. My guys know that they fly. These brothers might ride or die.
Guys know that they fly, know that they ride or die. My guys know that they fly, these brothers might ride or die.
Unless you heard it from me, got it from me, then you ain't heard it from me. All the energy. Unless you heard it from me, got it from me, then you ain't heard it from me. All the energy. Guys know that they fly, know that they ride or die. My guys know that they fly. These brothers might ride or die.
Guys know that they fly, know that they ride or die. My guys know that they fly, these brothers might ride or die.
Why they wanna move like that?
I'm looking to exit this trade on whatever green candle we get here. Because we have FOMC interest rate decision at 2, market could move really big during the announcement.
So just to keep users updated, we are half an hour away now from the top of the hour, where we get the US interest rate decision, where both market pricing and median analyst estimates see the Fed leaving rates unchanged at 3.75% at this meeting. Also worth noting, this is slated to be, if all goes to schedule, Powell's last FOMC meeting as chairman of the Federal Reserve. So going into this, we're going to look at a note from Deutsche Bank, where they note that the Fed is expected to keep rates remained unchanged at this meeting, with policy still seen as positioned to deal with risks to the outlook. The main focus will be on whether the statement for Powell's press conference starts to sound more balanced on the risks, though the base case is still that any more meaningful shift in guidance waits until June. The risk for markets is that the communication leans a bit more hawkish before then. Deutsche Bank noted the only limited changes are expected in the statement, with recent data still fitting the Fed's view of solid growth, low job gains, and little change in unemployment, and somewhat elevated inflation. They note that Powell is likely to focus on the Middle East conflict and stress that uncertainty remains high, while also warning that the longer oil prices stay elevated, the greater the risk that inflation pressures become more persistent. OPEC Plus likely to agree to an oil output quota hike at their Sunday meeting without the UAE, according to sources. So OPEC Plus are likely to hike quotas by 206,000 barrels per day, minus the UAE share of 18,000 barrels per day. Again, according to sources, did lead to a little bit of weakness in WTI crude there, as again, OPEC are likely to agree to an oil output quota hike at their Sunday meeting without the UAE.
Hit the like button, guys, if you're enjoying the show. I'm sick today, that's why I'm not talking much. Still trying my best to do good analysis, good trades. 69 likes so far. Let's push it above 100 likes, guys. Come on. So let's close this trade, guys. It's getting very close to the FOMC. Let's not carry this big position into FOMC. Can we catch some green and close this out? Hey, Gabriel, thanks for joining us. A bit sick today, otherwise doing great with trading. We are doing great. Got high fever, cold, and bad throat. Back in 5 minutes, guys.
Washington Post reporting that the Pentagon is going to send the Ford carrier home from the Middle East. A little bit of a strength in the S&P 500, a weakness in the dollar and WTI, as again, Washington Post citing the Pentagon as going to send the Ford carrier home from the Middle East. So the Washington Post is citing multiple US officials on the Ford carrier return. Looking into the article then, the aircraft carrier USS Gerald R. Ford will depart the Middle East and begin to sail for home in the coming days. That's according to multiple US officials. An expected relief for roughly 4,500 sailors who have been deployed for 10 months, but a loss of a significant firepower as peace talks between the US and Iran stagnate. So that now brings us 10 minutes away from the top of the hour, where we're expecting the US interest rate decision after the FOMC concludes their April meeting. So median forecast sees the rate remaining unchanged at 3.75%. Market pricing agrees with this as well. Keep in mind as well, this is due to be Powell's last FOMC meeting as chair of the Federal Reserve, as long as everything goes to schedule with Warsh's signing in. So again, before we go into this, just going to look at a note from Wells Fargo. They say that the Fed's dual mandate remains in tension, with PCE inflation still expected to stay around 3%, and the Middle East energy shock likely to push headline inflation higher in the near term, while the labor market continues to lose momentum. Against that backdrop, Wells Fargo say that the Fed is expected to stay patient and leave rates unchanged at this meeting. The statement is likely to stress optionality, with the Fed expected to acknowledge higher costs in energy and soften its forward guidance by shifting to more open-ended language around future policy moves. Powell is also likely to emphasize that policy is well positioned to wait for more data, while highlighting that the added uncertainty from the Iran conflict, and repeating that the committee stands ready to adjust policy as needed. Wells Fargo also note that 2 25 basis point cuts are still expected this year in September and December. So for those interested as well, on the previous headline, we have posted the Washington Post article on the feed for those interested. So ahead of the Fed meeting, just seeing commentary from Deutsche Bank's chief economist Lazzetti says that the Fed could adopt a more balanced language. So it brings us now 5 minutes away from the top of the hour, where we're expecting the US interest rate decision and the rate statement. So for the rate, the forecast is to remain unchanged at 3.75% for Powell's last meeting as Fed chair. So keep in mind also at the top of the hour, Trump is due to be meeting with the Artemis 2 astronauts at the White House as well. So we've got the video for that. It's on the feed for those interested. One minute remaining. I'll be leading with the US rate decision. Ten seconds.
Back just in
No
time.
change, no change. Rate remains unchanged at 3.75% as expected. So the Fed voted 8-4 to hold the benchmark rate at 3.75%. Myron dissents in favor of a rate cut. Hamak, Kashkari, and Logan voted against the easing bias, and they noted Middle East developments adding a high level of uncertainty. So looking through the rate statement now then, Fed say that developments in the Middle East are contributing to a high level of uncertainty about the economic outlook. The Fed characterizes inflation as elevated versus somewhat elevated in the previous statement, citing the global energy prices. Fed note that the committee is attentive to risks on both sides of the mandate. Developments in the Middle East are contributing to a high level of uncertainty about the economic outlook. So, in considering the extent and timing of additional adjustments to the Fed funds rate, the committee will carefully assess incoming data, evolving outlook, and the balance of risks. So, the vote in favor of policy was again 8-4, with Myron dissenting in favor of a 0.25 percentage point cut, Hamak, Kashkari, and Logan dissenting against inclusion of the easing bias in the statement. So the Fed voted in favor again 8-4. So short-term US interest rate futures continue to price in little chance of a rate cut this year after the Fed leaves policy rates on hold.
Yeah, I trade under LLC only when
Treasuries are steady after 4 dissents from the Fed rate decision. To the markets, nothing really holding here. Did see a whipsaw in the dollar, small reaction in the S&P as well. Nothing noteworthy there.
only if Profirm is not supporting LLC. In that cases, I use my personal ID.
The dollar pairs gains against the yen, last down spot 4%. The euro extended losses against the dollar following the decision as well.
No, let it bounce. If it holds, then yes. Right now it has not shown confirmation that it is holding. And anyway, it will be a scalp. I don't think I'm going to hold into a new higher or something like that. It is just going to be a 5-10 point scalp here. By the time you see, I'll be already done.
JP Morgan's Michelle with some commentary says the Fed is clearly moving toward a symmetrical policy.
Already missed my exit. 211. Didn't tag though.
JP Morgan's Michelle adds that the
Target
Fed is
build.
telling us increasingly they're concerned on the price level. Tasnim news agency says 6 Iranian crew members of the Iranian-flagged container ship Tuska freed after the seizure by the US. 22 Iranians are still being held though. The S&P 500 extends declines, last down around 0.4% following the Fed rate decision. JP Morgan's Michelle says the Fed has shifted to more hawkish. So Trump is now speaking at the live event. So we do have a video on the feed for those interested. The traders now see as much as a 25% chance of a Fed rate hike by April 2027, which is up from 20% before the Fed decision. So Trump just confirming that he did speak with Putin today. He talks about Ukraine and Iran. Trump says we had a very good conversation. Trump says, I told Putin I'd rather you help end the war in Ukraine. Trump says Iran has a small percentage of its missile-making facilities. Trump on Putin talk says, I think he might announce a ceasefire. So Trump says Putin might announce a little ceasefire soon.
What is this little ceasefire? Oh man.
So Trump here is just suggesting that the Ukraine war could end before the Iran war. So in 10 minutes time now, at the bottom of the hour, we see the FOMC press conference with Fed's Chair Powell. This is due to be his last press conference as Chairman of the Federal Reserve. So we've got a live video attached in the calendar. We'll get it on the feed as well. Oil futures extending gains, Brent crude rising to the highest since June of 2022 in intraday trading. Trump, when specifically asked which war ends first, says maybe similar timetables. It's been 5 minutes time now at the bottom of the hour. We do see the start of the FOMC press conference with Fed's Chair Powell. We have got the live video on the feed for those interested. JP Morgan's Michelle says the next meeting will be more two-way debates on rates. So traders add to bets on Fed rate hikes in 2027. They're now seeing a 45% chance based on CME FedWatch data. Trump on the UAE leaving OPEC says it's great. Trump says the UAE OPEC exit is great for getting gasoline and oil down. Trump says it's a good time to lower rates. So it brings us now 1 minute away from the bottom of the hour, where we're expecting Powell's press conference. So again, shortly expecting the press conference from Fed's Powell.
All rise. Yeah, ES came back, and ES came back for our masters. Yesterday's bottom was not a good bottom. That's why I say, right, these days when
Trump on Hormuz blockade said has been genius and foolproof.
these days if I lose, it's mostly because of sudden news, or they do something fishy like this, like they don't give us a bottom. This was a proper bottom yesterday. It came right back for it. We already got a good trade of it. More knock at this level, we might eventually lose that level. So we are waiting for the next setup now. We might lose that level with FOMC. Sorry guys, I'm sick today, so not able to talk much. Thanks to Powell, he's going to take over from here now. Trade smaller size, guys. Even if you see a good trade, good setup, trade smaller size. With the volatility, even if you don't trade, it is good.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The U.S. economy has been expanding at a solid pace. While job gains have remained low, the unemployment rate has been little changed in recent months. Inflation has moved up and is elevated, in part reflecting the recent increase in global energy prices. Today, the FOMC decided to leave our policy rate unchanged. We see the current stance of monetary policy as appropriate to promote progress toward our maximum employment and 2% inflation goals. Developments in the Middle East are contributing to a high level of uncertainty about the economic outlook, and we will remain attentive to risks to both sides of our dual mandate. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has been expanding at a solid pace. Consumer spending has been resilient, and business fixed investment has continued to expand at a brisk pace. In contrast, activity in the housing sector has remained weak. In the labor market, the unemployment rate was 4.3% in March and has changed little in recent months. Job gains have remained low. A good part of the slowing in the pace of the job growth over the past year reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Other indicators, including job openings, layoffs, hiring, and nominal wage growth, generally show little change in recent months. Inflation has moved up recently and is elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 3.5%, over the 12 months ending in March, boosted by the significant rise in global oil prices that has resulted from the conflict in the Middle East. Excluding the volatile food and energy categories, core PCE prices rose 3.2% over the 12 months ending in March. This relatively high rate largely reflects the effects of tariffs on prices in the goods sector. Near-term measures of inflation expectations have risen this year, likely because of the substantial rise in oil prices. Most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 3.5 to 3.75%. The economic outlook remains highly uncertain, and the conflict in the Middle East has added to this uncertainty. In the near term, higher energy prices will push up overall inflation. Beyond that, the scope and duration of potential effects on the economy remain unclear, as does the future course of the conflict itself. We will continue to monitor the risks to both sides of our dual mandate. We are well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. Monetary policy is not on a preset course, and we will make our decisions on a meeting-by-meeting basis. This is my last press conference as chair, and I will close with a few thoughts. First, I want to congratulate Kevin Warsh on his advancement out of the Senate Banking Committee this morning. This is an important step forward, and I wish him well as that process continues. The Federal Reserve exists for one fundamental purpose: to foster the economic conditions in which American families and businesses can thrive. Stable prices, a strong job market, and a financial system they can depend on. Every decision we make, whether about interest rates or regulatory and supervisory matters or other issues, is made in service of that purpose. Our decisions reflect the collective judgment of the Board of Governors and the Federal Open Market Committee, colleagues who demonstrate analytical rigor, principled judgment, and a genuine commitment to the public interest. Our collaborative and deliberative process has long reflected a shared commitment to finding common ground in service to our mission. This institution is resilient, capable, and staffed by professionals of extraordinary talent and exceptional dedication. It has been a privilege to serve alongside so many great public servants at the Board of Governors and around the Federal Reserve System. The Fed's work is only as effective as the public's understanding of it, and you, the press, are essential to keeping the public informed about what we do and why. The people we serve benefit from your careful reporting. I welcomed the announcement last Friday by the U.S. Attorney for the District of Columbia that she had closed the criminal investigation. She also noted, however, that she would not hesitate to restart the investigation. Over the weekend, the Department of Justice provided assurances that they will not reopen the investigation unless there's a criminal referral from the Fed's Inspector General. And, absent such a referral, if they do appeal the recent court decision, they would not seek, as part of that appeal, to restart the investigation or send new subpoenas. I've said that I will not leave the board until this investigation is well and truly over, with transparency and finality, and I stand by that. I'm encouraged by recent developments, and I'm watching the remaining steps in this process carefully. My decisions on these matters will continue to be guided entirely by what I believe is in the best interest of the institution and the people we serve. After my term as chair ends on May 15, I will continue to serve as a governor for a period of time to be determined. I plan to keep a low profile as a governor. There's only ever one chair of the Federal Reserve Board. When Kevin Warsh is confirmed and sworn in, he will be that chair. Once sworn in as board chair, his new colleagues will elect him to chair the FOMC as well. As I regularly point out from this podium, our success in delivering our goals matters for all Americans. I'm confident that the Fed will continue to do its work with objectivity, integrity, and a deep commitment to serve the American people. Thank you, and I look forward to your questions.
Thank you, Mr. Chair. Appreciate the kind words about the press. Often doesn't come from the podium in different places, but appreciate that. Can you talk about what is gone into your decision to remain on the board? What kind of criteria are you weighing, and how long might you stay? Thank you.
Sure. So, my concern is really about the series of legal attacks on the Fed, which threaten our ability to conduct monetary policy without considering political factors. And I want to note here, this has nothing whatever to do with verbal criticism by elected officials. I've never suggested that such verbal criticism is a problem, and neither has anyone else here. But these legal actions by the administration are unprecedented in our 113-year history, and there are ongoing threats of additional such actions. I worry that these attacks are battering the institution and putting at risk the thing that really matters to the public, which is the ability to conduct monetary policy without taking into consideration political factors. It is so important for our economy, for the people that we serve, that they can depend over time on a central bank that operates that way, free of political influence. It's part of the absolute foundation of this amazing economy that we have. It's just one of the many reasons why the U.S. economy is the envy of the world. That piece of institutional architecture separates successful countries from unsuccessful countries. It is extremely important, not for the people who work at the Fed at any given time, but for the people that we serve, that the Fed remain able to conduct monetary policy in a way that doesn't get pulled into politics, trying to help or hurt any particular politician or political party. It's critical for the people that we serve. In terms of when I would leave, I will leave when I think it's appropriate to do so. Was that all your questions, or was that?
Well, I just have a follow-up, which is, what would you say to the criticism that by remaining on the board, you're actually taking a political act and denying President Trump the majority of the board, which as president he would have if you left?
I don't see that at all. As I mentioned, I'm literally staying because of the actions that have been taken. I had long planned to be retiring, and the things that have happened in the last 3 months have I think left me no choice but to stay until I see them through at least that long. In addition, I don't see how this will interfere. My intention is not to interfere. I was a governor for almost 6 years, and the tradition is at the Fed that governors who understand how difficult the role of chair is, and as a soon-to-be former chair, I do understand how hard it is to get consensus with 19 strong-minded people. You work with the chair. You try to be heard, but also collaborate with the chair and try to support the chair when you can. When you can't, you can't. And I think that's the attitude that people generally take, and that's the attitude that I'll take.
Nick.
Chair Powell, if I could ask about the inflation outlook. In March, you described the standard practice of looking through energy shocks as conditional on inflation expectations staying anchored. Since that meeting, there has been very little progress reopening key energy trade corridors. Can you help us understand how the inflation outlook has changed in the intermeeting period, beginning with the prospects for tariff pass-through resolving on the timeline that you had outlined in March, before getting to the energy shock that is now on top?
So, I would look at it this way. For a long time, we've been working on the hypothesis, really, that tariffs would lead to a one-time price increase and that would go away over time.
This is Russell.
There would be no further change, so measured inflation wouldn't reflect that higher level going up more and more. And it's time for that to happen. We really do expect that to be happening in the next 2 quarters. So we'll be watching very carefully to see that what we've thought all along would happen. That's the kind of critical part of the forecast. We need to really see that. With energy, it's so hard to say. I mentioned, in sort of the textbook, you would look through an oil shock because they tend to be short-lived and they tend to revert, and monetary policy works with long and variable lags, so you wouldn't necessarily react right away. I think that is all the more true given that we're several years above 2% inflation and that we're already looking through the tariff shock. So I think we're going to be very cautious about that. But the question about looking through energy really is not in front of us right now. It hasn't even peaked yet. And I think we'd want to see the backside of that and progress on tariffs before we even thought about reducing rates.
So if I could follow up, the statement today preserves language that has taken on some meaning as it was socialized when the committee was actively lowering rates. Why is that easing bias still ripe, given how different the inflation outlook is now versus a meeting or two ago? And what more would have to happen for it to get evicted?
So that was, as you will recall, we had a discussion about that at the last meeting, and we talked about it in the press conference after the March meeting. We had the same today. We had quite a vigorous discussion about that very issue and the guidance, and is it still appropriate and that kind of thing. And I would say that the number of people on the committee who either could support that language changing to a more neutral stance so that a hike is as likely as a cut. That number has increased over the intermeeting period, and it's easy to see why. I mean, it's a good question, right? You see, inflation has moved up over the interim a bit. Core inflation's 3.2 now, moving, albeit just a little bit, in the wrong direction. And we know that there will be, that there's headline inflation coming out of the Gulf, and we don't know how much that will be. We're going to need to see. So it makes all the sense in the world that people would look at that and we'd have a vigorous discussion about that. You saw that 3 people dissented over the language. I think all of those people agreed with the rate decision. So the majority of the committee did not want to do that, and I didn't think we needed to do it at this meeting. It really was just a question of why do we need to do that now? We have so much to learn. There's so much uncertainty about the path ahead. There doesn't need to be any rush to make that decision now, because what happens in the next 30, 60 days, even by the next meeting, could really change the picture around that language. So it's a much closer thing on the committee than it was in March, and that makes all the sense in the world, it seems to me.
Claire. So Claire Jones, Financial Times. Just going back to this issue of the easing bias, we've now got oil approaching $120 a barrel when it comes to the benchmark Brent crude. If it stays around those levels 6 weeks from now, what would be your best guess as to whether the easing bias will still be in the statement? Thank you.
I wouldn't want to guess. Well, first of all, we're going to have new leadership in all likelihood by then, and new leadership's going to have a very important role to play in that. So I won't be standing here at this podium to answer your question. So I don't know. As I mentioned, that's all I can really say is that we had a great discussion about that today. It's gotten to be a better question in the interim period. We had the discussion. A majority are still on the page of not feeling the need to move to that level, and that's where I am. I get it, though. At a certain point, you would move, and that conceivably could come as soon as the next meeting.
Thank you. Just to follow on, the new leadership also seemed rather lukewarm on press conferences and on the dot plots. What would your advice to him be on these communication tools? So
I'm not going to give him any advice through you today here, but I think communications generally is. I think every incoming chair takes a look at communications, and it's a very healthy thing. I mean, communications it's very complex, and you can always be looking at new things. And if that happens, it feels like it's going to happen. That's a completely appropriate thing.
Target filled.
Neil.
Hi, Chair Powell, Neil Irwin with Axios. Can you tell us if you've been in touch with incoming Chairman Warsh? To what extent is this a normal transition process versus all the things swirling around, something unusual, and what can we expect when he takes that podium in a few weeks?
I haven't seen him since seeing him at a dinner in January where I congratulated him and had a nice chat with him. Haven't seen him. I don't know what a normal process is. The last process was with Janet Yellen, with whom I had worked for 6 years, and so it was. We were sitting down the hall from each other, so it was a very different thing. I think this is and will be a very normal, standard kind of a transition process. So that's what I expect. I have every reason to think it will be.
Quick follow-up: is the Supreme Court ruling on Governor Cook a factor in when you may leave as a governor?
I wasn't thinking of it as such, but no, not really. I mean, I'm thinking more of the other things I mentioned.
Chris.
Hi.
Hi, thanks for taking our question. I wanted to ask a question about your tenure, and Chris Rugaber at Associated Press. During your tenure as chair, you often spoke about how disadvantaged Americans benefited from extended periods of low unemployment. In the new framework the Fed adopted in 2020, some economists say elevated the Fed's employment mandate. Are you worried that the pandemic inflation spike that followed will make future Fed chairs more reluctant to pursue a hot jobs market, and should they be?
I don't know the answer to that. I mean, what we experienced in the teens, the mid-teens, was really low levels of unemployment for a long period of time and no reaction from inflation. And we all very much took notice of that. We also noticed that the biggest wage gains were going to people at the bottom end of the income spectrum. And we had many, many reports of, it felt like a fairly stable equilibrium, and a lot of benefits were flowing to people at the bottom end of the income spectrum, including companies were, setting up in people who were confined and like training them before they got out, and it was a very healthy sort of set of societal dynamics. So of course, I think anybody would love to get back to that. I don't think that anything that happened to create the global pandemic inflation was in any way related to overweighting the employment market. I mean, it was a global shock that happened essentially very, very similarly all over the world that had to do with closing, reopening, stimulus, and all that. And I mean, you could look at a graph of 10 big economies on the page and not know which was the U.S. and which was Germany, France, and things like that. So I don't think that insight was in any way responsible for the high inflation that we experienced. So, I mean, I think it's always been a balance. You've got to be strong on both of our dual mandates. And we for example, now we don't feel that the labor market is at all a source of inflation, so we don't need to be worrying about that. It's been a long time since we have had to worry about that. Well, actually, during the pandemic recovery, the labor market was super overheated and tight, and that's when we had to worry about it, but not now.
And just on the other issue, do you need more assurance from the Justice Department before stepping down? Is that what you're waiting for, or what else?
I'm waiting, for the investigation to be well and truly over with finality and transparency, and I'm waiting for that, and I will leave when I think it's appropriate to do so.
Michael McKee.
Michael McKee from Bloomberg Television and Radio. I'd like to ask you if you could explain a little more or characterize a little more the discussion about the two-sided view and interest rates, because there were some members of the Open Market Committee who've been suggesting that we may need to raise interest rates even absent the war because inflation was not coming down fast enough. Is there any sense that interest rates might have to go up, or was this just a setup to sort of warn people that you're worried about the war impacts?
So nobody, the three dissenters and others who could have supported that, and others who were voters and non-voters who preferred it, they all supported the rate decision, right? So people are not saying we need to hike now. It's more a question of, don't we kind of feel that we should be neutral? And what are markets doing? People argue that this is consistent with markets are doing. And again, it's a very fair question, but these changes, it's a form of forward guidance, and you don't want to make them in a way that will be sustained and continue to make sense, and not something you need to take back, fairly quickly. So I think a group of us, including me, didn't feel like we needed to be in a hurry on that markets are not confused about our reaction function. We don't have a problem to solve on that. But the other side of the argument is a good argument too, as I mentioned. It's a perfectly good argument to be having, good discussion to be having. So, and it came out the way it came out.
Well, you've got three dissents in favor of two-sided warning. You've got yourself staying on the board. You've got the criticism that does come from elected officials, and you've got a lot of critics who have faulted the Fed for being too slow 2021 with inflation. Are you worried about Fed credibility under all of this? Is that one reason that you want to stay on?
Not driving my thinking now. I mean, monetary policy is going to get made by, 19 people. There's a lot of stability there. I mean, if you think about it, every new Fed chair has the same situation, which is you've got 18 colleagues on the FOMC, 11 of them vote during any year, and your job is to create consensus. It's to talk to them, understand them, be inside their thinking, and be able to pull them together and get consensus and move. And that's what every Fed chair has to do. And I think Kevin Warsh is actually quite well. He has the capabilities, skills to be very good at that, I would think. So I think I'm not so worried about that process. I think that'll work itself out.
Thank you, Chair Powell. Howard Schneider with Reuters. You mentioned that staying on as a governor, you intend to keep a low profile. I'm just wondering if you could give us a little more detail on what that looks like and how you can... Touche. Walk down the steps. What that looks like, and particularly around the policy discussion, how you're able to have your intervention and not be a shadow chair and not have a kind of an outsized influence over the process.
Yeah, that's just something I would never do. The shadow chair thing. No, I don't know what the exact specifics of it will be, but I'm going back to being a governor. I respect the role of chair. I was a chair. I was a governor for 6 years, and I know what that's like. I know it, and I had a pretty front row seat particularly with Chair Yellen, to whom I was close when I worked with Chairman Bernanke for 2 years, but I was brand new at that time, so I got a sense of what it was, and I had real sympathy for how hard it is to get that group to consensus. And I always felt like I don't want to add to that unnecessarily, and that means try to support the chairs where the direction the chair wants to go in, if you can. If you can't, you can't. And I think that's the way it's always worked there, because the chair only has one vote, plus the ability to develop consensus. And if people won't be, they won't, if they're not flexible at all, then how do you ever do that? And so that's why the authority the chair has really is to develop relationships with people and work with them, and then put something forward that has consensus. And I propose to be a very constructive participant in that process, really out of respect for the office of the chair.
And in your view as a soon-to-be governor, how do you see the risks of oil prices bleeding into core inflation in coming weeks? Because it seems like the commentary that was coming from particularly some of the Reserve Bank presidents, they were elevated concerns about the bleed into core. And, here we are with 3 dissents now. What do you see as the prospect of a core inflation?
Those prospects are real. Remember, though, they're real, and the real thing is we're going to have to wait and see. We're going to need to see. And the good news is we think our policy stance is in a very good place for us to wait and see. We're right kind of at the high end of neutral or perhaps mildly restrictive. The labor market shows more and more signs of stability, whereas inflation is kind of misbehaving. And so maybe a little bit of restriction or the high end of neutral is just the right place to be. So we can wait here and see how things work out before we act. And we'll see how much how much does come through into core. You see it already in airfares, of course, but you may see it in many other places. We just don't know yet, and it's so unknowable, because how long will the strait be closed? You can develop any number of scenarios that you want, but we really won't know until we know. So fortunately, we're in a good place to wait and let things develop.
Thanks, Mr. Chairman. You started holding post-meeting press conferences for every meeting as opposed to the ones with SEPs. Can you talk about why you see that as a net positive?
So we always said, when we were doing quarterly press conferences, we always said we can move at any meeting, but we only ever moved at the quarterly SEP meetings where we had the press conference. So if you think about it, during the pandemic, we were moving like a lot at every meeting and sometimes between meetings, and doing that without a press conference, I think, would have been quite challenging. It's become the industry norm. It's the standard. I don't know whether that has to remain that way. I don't know. I mean, it's just something people have become used to, and I do think it's quite helpful to, I mean, I try to deliver a message on behalf of the committee rather than 18 other people going out and delivering their message, and it's going to be all over the place because we do, thankfully, have widely disparate views.
Okay, thanks. The other thing I wanted to ask about was the communications review from last year. Could you describe the debate last year, what changes were considered, what you wanted, and what prevented action, any action on those changes?
So yeah, I'm not going to go into the real small specifics, but what we found very quickly was that making changes, making really large changes, for example, to the dot plot or the SEP, it didn't have, we couldn't come up with anything that had really broad support on the committee, and so we just moved on. We didn't really do as much on that as we might have. And I was never the world's biggest fan of the dot plot, but you can't beat something with nothing. And we've looked at a bunch of things, and it's something, like I said, I think every new chair is going to look at our suite of communications and think about what would be changes. We are the only major central bank that doesn't publish a forecast. And that's because we have a 19-person committee, and you try to do that at the board. That's hard. At the committee, that's hard. It's hard if you do it at the staff. So it works. I think our communications are fine, but looking at doing it in a different and better
Top of
way
the hour.
is the most natural thing in the world.
Thank you. Colby Smith with the New York Times. If I could follow up on Mike's question about hikes, are we right to assume that the hawkish outcome for the Fed is still one in which the committee just extends the pause in rate cuts? And to what extent is there a growing sense within the committee that monetary policy really isn't just restrictive at all right now? The economy is holding up relatively well despite this major energy shock. The unemployment rate has ticked lower. Inflation was moving sideways even before the war and is now moving higher. So where is the committee at on that debate?
Where we're at is we think our policy rate is in a good place. If we need to hike, we will certainly signal that, and we will certainly do it. And if we need to cut, then, or if it's appropriate to cut, then we'll signal the opposite. I think because we feel like we're in a good place to move in either direction. Nobody's calling for a hike right now, so it really is going to depend on how things evolve, and that's really where it is. As I mentioned, much closer question this cycle on changing the guidance, but ultimately we didn't.
And as it relates to the war, at what point do you think the risk to growth will be larger than the risk to inflation as this conflict drags on?
You just have to find that out empirically. Given our the fact that we're a big exporter of energy, and that our economy is far less energy intensive, oil intensive than it was during the 70s, the effects on the United States are really substantially less than those of Western Europe or Asia, who are feeling much greater effects from these things. The effects we're feeling in the current situation currently, and in sort of what's priced in, which is a relatively quick outcome. If this goes on for much longer and prices go much higher, then we'll feel that much more. And of course, I'm talking about aggregate inflation numbers. We're very well aware that people are experiencing higher gas prices all over the country now, and that hurts. Those hikes may continue to happen. And other things are going to start to reflect airline fares I mentioned, and other products and services that are dependent upon petroleum and derivatives of petroleum. People are going to start to feel that.
Edward.
Thank you, Chair Powell. Edward Lawrence with Fox Business. So I guess I'll just ask you directly on this. The markets don't see a rate cut at all this year, is what they're predicting. Do you think that we are at the neutral rate? Why or why not?
The neutral rate is we cannot know it with certainty. I think pretty close to the neutral rate. Yeah, I always had it between 3% and 4%. We're a little north of 3.5%, so that's well in the range of what I would consider a reasonable, but at the higher end of the range of what I would consider reasonable neutral rate. I think the labor market is still probably cooling off just a little bit, and I don't think there's much of a case for any case really for policy looking meaningfully restrictive, maybe mildly restrictive or neutral, I would say.
And I want to follow up on some of the other questions about your future a little bit. The first time we've seen 4 dissents now since October of 1992, are you handing off a divided Fed?
The thing to remember is we have always had vigorous debates, and they're excellent debates. I have to say they've been really good, and we're in an unusually difficult situation. So we've really had 4 supply shocks. You can say more than 4, but at a minimum, we had the pandemic, we had the invasion of Ukraine, we had tariffs, and now we have Iran and the oil, the oil spike. So every supply shock has the capability of driving inflation up and unemployment up. And what do? The central bank has a really hard time knowing what to do. So the right thing to do is to try to balance the achievement of those 2 goals, and that's what our framework calls for us to do. But these are really tough, difficult judgments. You've got to have a forecast for each variable. You've got to think how long it's going to take to get back to target. You got to think how restrictive or not is policy. So it's only natural that you have a range of views on the committee. People are going to see it different ways. They're going to have different risk tolerances and that kind of thing. I mean, if everybody agreed, that would be surprising. And I think it's partly a function of the extraordinarily challenging set of supply shocks that we've been dealing with now for 5-6 years.
Thank you so much, Chair Powell. Selena Wayne with ABC News. Are you confident that Kevin Warsh will stand up to political pressure from President Trump?
So he testified very strongly to that effect in his hearing, and I'll take him at his word.
And when it comes to gas, right now it's over $4 a gallon. Inflation just hit a 2-year high. Should Americans expect to be paying higher gas prices for the rest of this year? And in your view, does that take a rate cut off of the table? And secondly, by staying on as Fed governor, what message do you think you're sending to the president?
I don't know what gas prices are going to do for the rest of the year. And it will depend on how long the strait remains closed and how quickly it can be reopened and that kind of thing. But remember, when gas prices go up, that's disposable income coming out of people's pockets, so they're going to spend less on other things. So there will be a hit to GDP. So it's a question whether spending goes down to offset the inflationary effects. So it's not the answer isn't obvious ex ante whether you should move your rate over because of that. We'll have to see how it evolves.
And the message it sends to President Trump by staying on?
I'll stand on what I said earlier.
Victoria.
Hi, Victoria Guido with Politico. During your tenure, Fed independence has come under pressure in a lot of different ways. And I was just wondering, practically speaking, where do you see Fed independence as coming from? Is it the law? Is it political support from Congress? Is it the actions of the Fed? What sustains Fed independence?
Well, it's to a significant extent, it is the law. And, we've had to go to court to successfully so far to defend it. But the law does create a setting in which the Fed can and is directed to make monetary policy without consideration of political factors. And so part of it is the law. But it goes beyond that, though. There's a set of customs. There's a boundary line between the Fed and the administration, between the Fed and the Treasury Department. And we need to continue to respect those boundaries about what the Fed is responsible for and what the Treasury is responsible for and what the rest of the administration is responsible for. So some of it is legal. In fact, it's all legal at the end of the day, but it's more than just monetary policy. We don't want to use our tools we haven't wanted to use our tools to achieve goals that are really clearly outside our mandate. Every administration looks at our tools and thinks, yeah, it would be good to repurpose those to serve other purposes, but that's dragging us into politics and into fiscal policy. So we've resisted that.
Well, and maybe another way of asking it too is, do you think that Fed independence is as strong now as when you became chair? And if so, why?
Look, I think it's at risk. I mean, I think these legal assaults, if you will, as I mentioned, the institution is being battered over these things. We're having to resort to, the courts to enforce our legal, it's not so much independence. It's really the ability to make monetary policy without political considerations. That's what we're talking about. And we've had to do that, and we've been successful so far, but that's not over. None of that is concluded yet. And it's really important. It's not about people who work at the Fed or the institution. It's about the benefits of a central bank that makes decisions based on analysis and our best thinking, rather than trying to help or hurt politicians. It's that there's a bright line between central banks who do one and do the other, and successful countries have uniformly, successful advanced economy countries have a really strong set of protections around their central bank just for that reason. So that's what it's all about. I think I am confident, as I said in my remarks, that the Fed will continue to make its decision based on analysis, rigorous analysis, and not on political considerations. But we've had to fight for it, and I'd like to think that we can get out of that era and go back to respecting, what the law says and what custom has been, which is to, let the Fed do our thing. It's an institution full of human beings who work super hard to get things right for the benefit of the public. We're all human. Don't expect perfection, but do expect us to make, decisions without political considerations and the very best analysis we can bring.
Katerina Saraiva, Bloomberg News. How would you characterize what you've heard from your colleagues on your decision to stay? Do you have their support? And then have you heard concern from your colleagues about continued legal attacks from the executive branch? Is this something that others have, talked to you about?
So I think that I don't want to report on what my colleagues think. They can speak for themselves. But there are widespread concerns that these things may continue. That's all I'll say. And and that would be a problem. And so.
And then I just also wanted to ask about Governor Waller's speech on the reserve banks. Do you have any thoughts on centralizing some of those functions in the way he described? And then are you concerned that something like that could potentially be a slippery slope to, to consolidate reserve bank functions even more in such a way where the central bank ultimately loses some of that important regional information?
So we try to be good stewards of the public's money and efficient, and Chris Waller is particularly passionate about that. Of course, so are the presidents, and it's a question of how do you accomplish it. We of course, and Chris said this in his speech, we want 12 strong independent central banks with their own staffs and their own monetary policy views and all that. But there are things that are done in all 12 which could well be done at one much more efficiently and with cost savings. And so there's a back and forth going on that, but everybody's on the same page. The other thing he touched on was the idea of removing reserve bank presidents from office over different views on monetary policy. And I would just agree with him so strongly that would be the beginning of the end of the Fed's ability to make monetary policy independently. If every administration could come in and do that, you're just another cabinet agency at that point. So that's not something that I would support. Chris said the same thing.
Christine. Thanks, Chair Powell. Christine Romans, NBC News. I want to ask about legacy. When the history books are written, how do you think your stewardship at the Fed will be remembered for the past 8 years?
I'm going to just say that that's for someone else to say. I'll give you a mulligan on that.
All right, I'm going to ask you about misbehaving inflation then. You talked about those 4 big shocks, supply shocks over the past 5 years, and inflation still misbehaving. What's your message to American families who feel like inflation has not been under control for them really since the COVID reopening?
You know, we're committed to bring inflation back down to 2% and sustainably. That's our goal, and we'll stick at it until that happens. We keep getting these events keep happening, which keep driving up costs, and you know, the best thing we can do is to use our tools to guide inflation back down to 2%. I think trying to get there really quickly could be very costly in terms of job loss and things like that, but we try to get there over time in a way that does the least damage possible, and you know, our commitment to that is never-ending and unshakable.
How would you describe the economy outside of the misbehaving inflation? I mean, it's still awfully resilient given all of the blows.
I don't know that you can be awfully resilient. So it's actually quite resilient, I would say, because it's a positive thing. If I can have that amendment, yeah, you know, growth is really solid across our economy. Some of that is that consumer spending is hanging in pretty well. The most recent data are good. And some of it is just the apparently insatiable demand for data centers all over the United States. So a lot of business investment going into building data centers, and every reason to think that that continues. So you've got an economy that's growing at 2% or better. PDFP, which is private domestic final purchases, which is really a better signal of a momentum in the economy, is actually higher than that. So that's a positive thing. If you look at the unemployment rate, it's 4.3%. So that's a low rate. That's pretty close to mainstream estimates of the natural rate. We've been there for a long time. So it doesn't feel like a good labor market to some who don't have jobs, because quits are really low, hires are really low, and there's effectively no new net job creation. So that's you know, in a sense, the labor market is in balance, but it's an unusual and uncomfortable kind of a balance where people who don't have jobs will have a hard time breaking in unless somebody quits their job. So that's pretty good. You know, inflation is the thing we need to work on, and it's partly tariffs, which we think that inflation should subside over the course of this year, because it's kind of a one-time increase. It shouldn't be repeated, and that should start happening pretty soon. The energy inflation that we're getting should go through fairly quickly. And we'll just have to see how that works out. In the meantime, you know, we think our policy stance is in a good place for us to hold and wait developments.
Jennifer. Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. At the risk of beating the dead horse here, clearly 3 members objected to keeping that easing bias in the statement. And you said that the majority still didn't need to move to new language at this point. So does the majority of the committee still have a bias towards cuts at this point, or has the bias on the committee shifted away from cuts towards holding or hikes if that was needed?
So I think that, you know, the center is moving toward a more neutral place, and that's sort of what markets are saying too. I just think, you know, there's a lot of signaling going on when you change guidance like that. And so we just, I guess a majority of us didn't feel like we needed to send a signal on that right now. But maybe it'll come to that. And the reason is because, you know, we're kind of waiting to see what happens with events in the Middle East and what are the implications of those events for the U.S. economy. So there's a group who feels like we don't need to be in a hurry to do that. We get it, and of course we will move to a hiking bias if we want to hike, and we'll move to a neutral bias before that. But there was a difference over whether to do it at this meeting, at a meeting at which all but one of us agreed that the rate decision was correct, which was not to move.
And you just said moments ago that you believe Fed independence is at risk. Is it safe to say that you want to stay on as a governor to serve as a check and balance on that?
I want to stay until I will stay until I feel it's appropriate for me to leave. And yes, that is really what is driving this. I'm not looking to be, you know, a high-profile dissident or anything like that. I'm more looking at the other aspects of this and wanting to see that things have calmed down and we're returning to a traditional model of working with the people that you have and bringing them to consensus and respecting that consensus. That's what I'm hoping to see.
Matt Egan.
Thanks, Chair Powell. Matt Egan, CNN. You've made many tough decisions in your time at the Fed, and as your time as chair comes to a close, and you think about your tenure and perhaps your legacy, are there any decisions that stand out as ones that you're particularly proud of? And are there any that, with the benefit of hindsight, you would take a mulligan on?
Yeah, it's hard. I wouldn't want to single out individual things at this point. I'll just say, all of us together have consistently tried to do what we think is best for the American people based on our tools and our objectives that Congress has given us. It's been very challenging because we've been in a situation of supply shocks really for 6 years, and that's just a very different situation than for a very long time. What the Fed and other central banks were doing all the time was demand management. And there was always the inflation mandate, but inflation was low for 25 years. So this is a very different world and a much more challenging one where you have to balance the two objectives. And by the way, central banks that have an inflation mandate have to do exactly the same thing because they're balancing economic activity. So that's been challenging, and we've tried to do our very best through these really challenging times, and I'm really proud of the work that I've done, that my colleagues and I have done during these years.
Now, to follow up on some of the discussion around Fed independence, can you explain to the public why this notion of Fed independence, which might sound kind of wonky to some, is so critical? I mean, what are the consequences if either the Supreme Court rules against Lisa Cook or the Fed in the future decides to make decisions more around the political calendar instead of the economic data?
So every major advanced economy in the world has made the same decision the United States has made, and that is that they want to take the making of monetary policy, the setting of interest rates to support the economy, to achieve maximum employment and price stability. They want to take that out of the direct control of elected politicians. And the reason is elected politicians are always running for election, and they'll always want low rates, and that will lead to inflation over time. So after literally centuries of experience with that, the whole world moved to the different model, and it's worked great. I mean, this is the era in which inflation was under control for 40 years. Then we had the pandemic, inflation everywhere in the world, and now we have inflation that had gone pretty much all the way back to target, really close to all the way back to target, and now is being buffeted by the energy shock, and the U.S. buffeted by the tariff shock as well. So, but what I would say to the general public is that's the backstory, is that don't think about an institution being independent. Think about it this way, that you want people to make monetary policy and set interest rates to benefit the general public and to try to achieve economic goals, which are maximum employment and price stability, and focus only on that and ignore political considerations, completely ignore them. This isn't bipartisan, this is nonpartisan. So we want to just work directly for the American people doing these things. We don't think, oh, I want to do this because the president says it's a good idea, or because there's an election coming up and I want to speed up or slow down the economy. I mean, think about that. If that's what we were doing, we'd have no credibility. Markets would lose faith in us, and our ability to control inflation and have any respect would be gone. And let me say, whatever people say, the markets believe in that we will produce 2% inflation. If you look at longer run expectations, markets believe that there's no sense in which our credibility in the markets has weakened. It's just not the case. It's people do get it, that this is our commitment and that we will achieve it, and it's priced in. If you disagree with that, then you can go ahead and bet against the markets, but the markets are pricing in Fed credibility.
Okay, we'll go to Richard for the last one.
Thank you, Chair Powell. Richard Escobedo with CBS News.
We've talked a lot about gasoline prices and even you mentioned airline ticket prices, both of which are up dramatically because of the war in Iran. And so I wonder, are you seeing that weigh down consumer spending in other parts of the economy? And if so, how worried are you that that will be a drag on growth?
You don't see it in spending yet. You really don't. I mean, as one of your colleagues said, the economy has been resilient. It really has. Not just this time, but it's been remarkably resilient for some years now. The U.S. economy has just powered through shock after shock, and consumers are still spending, and that's what the banks will tell you, credit card companies will tell you, the retail sales numbers that we got most recently. People are still spending, and how long can that go on in a world where if gas prices were to go up a bunch more, that's taking otherwise spendable money out of people's pockets. But right now, we don't actually see much slowdown in yet, certainly none from this. But you think logically you will, because people have a certain amount of money to spend. If they're spending 25% more on gas or something like that, then that's going to come out of other spending. But we don't see it yet.
One last thing. You mentioned those economies in Southeast Asia that are particularly dependent on petroleum. They make a lot of the stuff that American consumers buy. So was there any discussion today about whether or not those costs getting passed along to consumers is a real concern, and whether or not that might push up inflation?
So all of those things are in the models that we use to calculate inflation. So they're just parts. You can ask about anything like that, and they have a place. The staff has a place where they're looking at that and pricing in what will happen with higher prices and that kind of thing. So it's there. The effects are not that big yet. We're a huge economy. The import sector is only 10% of the economy, so we're not like a European country where 50% of the GDP is in the external sector. We're also, as I mentioned, we're an oil exporter, so we're not feeling the same kind of pain, and we're not likely to feel the same kind of pain that economies in Western Europe and certainly in Asia are feeling. Anyway, thank you very much, everyone. I won't see you next time.
Hope you enjoyed listening to Powell. It's our masters, guys. Become member. All this trade. Look at this. This is also because of our masters. This long we are getting is because we have level there. We're just bouncing off our level. Look at that. We pull back after a break into a new high. Pull back, and it's still a long. Telling you, this strategy has everything in it. Reversals, whether it was morning reversal, it was from our master's level. Market coming crashing into our level, reverses, marking the top, marking each rejection, marking the rejection, final rejection, and a breakout, confirmation of the breakout. Click join button on channel page to become member or whatever. You like Powell? Yeah, he's a good guy, but whatever. His term is over. I should not have hanged around more, in my opinion. It is now politics. If he's hanging around to balance the vote for rate cut versus not cut, that is bad. But guess what? He said he's going to maintain low profile. Hit that like button, guys. Do we have 100 likes? I'm sick. Real bad today. Very high fever. Still I'm sitting so that I can guide you. Even if it is buying at this high, it is because of our level, because of our strategy. 87 likes. You didn't even cross 100 like, guys. Come on, I might have 102 fever right now. Is the alter ego sick too? Yeah, today alter ego is absent today. Intentionally kept out. But I did well. We might even recover from this loss. Whatever loss we had, we have almost recovered that loss. I think we are down more than $2,000 on 4 accounts. 2 accounts I already cleared. And this is the last trade in these 2 accounts now. If we win this into a new high, we'll clear the entire backlog. My levels are amazing, right? World doesn't realize it. They watch, they come and they leave. Nothing is going to change, guys, Look at the accuracy of those levels. Does it mean anything for anyone? Look at to the penny bounce, to the penny rejection, to the penny rejection here. Even this bounce, right? Confirming this is a long from here. Well, it means nothing, guys. Win or loss, but the idea is, do you have clarity on how you want to trade? That is very important. I sized up too much. I took drawdown. I came to my senses, traded well throughout the afternoon, recovered that loss. If I had not done the, like overconfident act of adding too much, like I did yesterday, right? There was no time left to recover. That was, I think, late afternoon trade. I took a loss. If I take a loss in the morning, I have sufficient time to recover from that loss. Yeah, it works great, acing. That's why I'm saying, right? I failed to advertise those levels. I don't know how much more I could have done. But people, I don't know. Anyway, let's close this trade after. Hopefully we get one pop and we close this trade now. This FOMC related price action where they reverse the move once Powell is done talking. But let's see if they will break the structure. I am okay to get stopped out. Because we were below it. That's why in two minds. I think short must take profit now. They are great, Gautam. It's awesome. I don't think world has seen anything like this before. Any indicator, any strategy. It's very underrated. And I am in the wait when the world realizes what we do with our levels. If I rent a Lamborghini and put it here, then world will surely believe the levels are great. When people who are paying for it, they say these kind of comments in the chat, others they watch and they think like maybe a paid promotion or something. I show it to them. I tell them that it's not done now. It is done a night before, a couple of days ago, couple of bro, you don't have Lamborghini. Why should I believe you? So we could be finishing at that level itself, our masters. Let's see if it wants to crack higher. We have yes is preventing. Yeah, time is less, you're right. Okay, let me check the door. Someone at the door.
1 minute remaining for the market on close imbalance. Ten seconds. Market on close imbalance. S&P 500 sell side 433 million, Nasdaq 100 sell side 563 million, Dow 30 sell side 43 million, Mag 7 sell side 387 million. So reminder, at 4 p.m. Eastern Time, expecting earnings. Q1 2026, estimated revenue 177.21 billion, estimated EPS $1.64. Google Q1, estimated revenue 91.56 billion, estimated EPS $2.62. Meta Q1, estimated revenue 55.51 billion, estimated EPS $6.64. Qualcomm Q2 2026 earnings, estimated revenue 10.56 billion, estimated EPS $2.55.
Yeah, it's masters. It came right back for the
5 minutes time,
masters.
expecting earnings. Amazon Q1 estimated revenue 177.21 billion, estimated EPS $1.64. Google Q1 estimated revenue 91.56 billion, estimated EPS $2.62. Meta Q1 estimated revenue 55.51 billion, estimated EPS $6.64. Qualcomm Q2 estimated revenue 10.56 billion, estimated EPS $2.55. Shortly after 4:05 p.m. Eastern Time, Microsoft Q3 earnings, estimated revenue 81.46 billion, estimated EPS $4.03. eBay Q1 estimated revenue 3.03 billion, estimated EPS $1.58. Ford Q1 estimated revenue 39.58 billion, estimated EPS 18 cents.
Oh. Yeah, cleared all the losses. We're down 2000 and change in the morning. In 4 accounts, all cleared now. Yeah, if you take a drawdown in the morning, it is still possible.
Self-filled.
If you take drawdown like late afternoon yesterday, there's no way you can return. Alright guys, thank you so much. Have a nice evening. I'll see you back hopefully tomorrow morning. I'll be better. Take care, take it easy. Bye bye.
Shortly expecting earnings from Amazon, Google, Meta, and Qualcomm.